Good afternoon, everyone, and thank you for joining us on today's Chamber call. My name is P.J. Prunty. I'm the President and CEO of the Greater Danbury Chamber of Commerce. We will be hearing from industry experts from the tax, insurance, and employment front who will provide a general overview of the impact of COVID-19 on your businesses within these respective fields. Once our guest speakers finish, I will pose a few questions that I received prior to the call, but additionally, we ask that you look at the chat button at the bottom of your screen. We are encouraging you to submit questions as our presenters are speaking, and we'll take a look at them at the end of our call. So first up, I'd like to welcome Jim Arconti, the Senior Vice President, and Rose Kiernan to provide us some insight in the insurance field. Jim?
Thank you, PJ. Welcome all the attendees. Going through my notes, I wanted to make sure we cover the first obvious point at the very beginning, which is why doesn't there appear to be any insurance coverage for the pandemic? Simply stated, all of our property insurance policies contain two big exclusions. One is for virus and bacteria, which is precisely what the COVID-19 is, and the other is for civil authority. So when the government entity tells you to shut down, there's no insurance coverage for that. The reason those two exclusions exist in all of our property policies is simply because the exposure to virus and or civil authority is so big and so immeasurable that the insurance industry would not be capable of paying for claims on a scale of this size. So that's really what you're seeing happen here. That's why you see the federal backstops being put into place to kind of reimburse the public for expenses related to this. So the only exception to that general rule might be for certain cases involving workers' compensation coverage if you're in the health profession, but that's kind of a sidebar point. In terms of insurance premium relief, we're seeing a lot of requests for this to happen, and there's a lot of events happening at 4 different levels, both at the state level, individual account level, and at the federal level. So at the state level, the governor's executive order 7S, as in Sam, provides a 60-day grace period to pay your premiums on your life, health, auto, property, and liability, and other types of insurance. This 60-day grace period is not automatic. You must notify your insurance agent or broker that you like the grace period and provide any required additional information to your insurance carrier, who then ultimately approves that grace period. The grace period will only be granted after the initial deposit premium has been made on a policy. So if you're going to be beginning an insurance policy tomorrow, for example, you must make the deposit payment first, and then you could ask for the grace period after that. The grace period is just that, it's a grace period. Premiums are not forgiven, they're just merely delayed. The payment schedule is merely delayed. This executive order 7S goes through till June 1st at this point in time. So you can ask for that grace period up until that date. And finally, I have it in bold print in my notes, and I really want to drive this home. You cannot grant yourself the grace period. You can't simply say, I'm not going to pay my premium, they can't do anything to me. That's wrong. All that's going to do is result in your insurance policy being canceled. You need to go through the process of contacting your agent or broker, who will then contact your carrier, who will then give you the grace period grant. At the individual account level, that is, what can you do to reduce your costs and expenses right now related to insurance? You have some specific things you can do. One is you could advise your insurance agent and or your carrier that you want to reduce your estimated sales or estimated payroll figures on your general liability or workers' compensation policy. As you may know, that will drive down the premium charge on those two policies. Again, this is something you need to run through your agent, broker, and or insurance carrier. Second thing you can do is you can consider suspending auto insurance on vehicles that might be laid up or not being used in your fleet. Again, this needs to be approved by your insurance carrier and by any lien holders on those vehicles. Most important point on the auto suspension: do not remove your comprehensive damage coverage. Again, comprehensive damage is for fire, theft, vandalism. It was only 2 years ago that we had a macro burst. Vehicles that were parked and got damaged by a macro burst, that's a comprehensive damage claim. So be very careful about not removing that. Another example of what you can do is look at your inventory levels. And if your inventory levels are way down, you might want to lower the limit on your property insurance for those inventory levels and realize the savings. If your policy program expires in March or April, and you know your exposures are going to be down because of the outbreak, you might want to move up and get those audits on those workers' comp and general liability policies done early so you can get those refunds a little bit faster. okay? At the federal level, we had one important change provided by FEMA. If you have a flood policy that's got an expiration date of between February 13 and June 15, you have 120 days after the expiration of that policy to make the premium payment. So again, let's say, for example, you have a policy renewing today, April 9th, you have 120 days from today to make that payment. Now, important point to watch out for here too, 120 days from now, it starts to get us into the tropical storm season. The last thing you want to have happen is have your flood policy canceled because you forgot to make the payment 120 days later, and then a tropical storm start bearing down on the East Coast. Typically on flood insurance, you cannot place it without a 30-day lead time. So example, if you let your policy lapse now, you see a storm coming on August 1st, even if you applied on August 1st, it wouldn't be effective until September 1st. So be very careful about the flood policy issue, all right? So you want to time that out. A couple other big question areas we're getting posed these days is what happens when my employees go home and work at home? From workers' comp standpoint, there really is no difference between home or office. Two triggers for workers' comp coverage: the claim must arise out of the employment and in the course of employment. So really there's no difference between an office employee working in the office or an employee working at home. Business equipment, maybe your employees take some equipment home from the office to the home to work. Just make sure you add those home locations to your business property policy. Just let your agent or your carrier know that you now have some employees at home, and here's the home addresses. We're seeing a big increase in the risk of cyber attacks. So if you don't have cyber liability insurance coverage, you may want to think about it, but we're all getting a lot of emails with the COVID-19 pandemic subject line. Be careful for hacking events. We're seeing a big uptick in that. Personal auto policies being used for delivery. Big increase here in risk as well. Personal auto policies do not cover the liability or property damage resulting from the use of that auto for commercial purposes. There's a personal auto and then there's a commercial auto. However, Allstate in Connecticut now allows a personal auto to be used for commercial delivery if you're in a restaurant environment. So for those restaurants that have waiters and waitresses on staff doing home delivery and they're using personal cars, Allstate now allows it. The insurance commissioner in Connecticut has urged, not mandated, but urged other carriers to adopt that position. So again, if you have an employee who's now using a personal car for delivery work, that employee should check with their insurance carrier for specifics and if that's picked up. Last thing we're going to see an increase in employment practice liability issues because of the complexity of furlough versus unemployed versus not coming back and all the attendant employee benefit complexity around it. Again, if you're not carrying employment practices liability insurance, this is something you want to consider for the future. We just think there's going to be an uptick in claims after this all blows through for employees who may not feel that they were treated as fairly as they should have been. All right. Last thing, my last comment I would offer is that in the independent insurance agency network, we have a slogan called that we're the trusted advisor. Now more than ever is the time for my profession to show that. So feel free to take advantage of any of the expertise that my firm has or your own agents and ask them for the guidance that you guys so rightly deserve. Thanks a bunch.
So Jim, thank you very much. Appreciate your time and your insight. Next up, we are fortunate to be joined by Laura Goldstein. She's an attorney from Collins Hannafin who will touch on some of the labor and unemployment information. Laura, the floor is yours.
Thank you, PJ. I appreciate having the opportunity to participate today. This is a wonderful thing that the Chamber is doing. And I just have to say, PJ, you're doing a fantastic job with the Chamber website. There's so many great resources on your website. Most of the employment questions we received for today dealt with unemployment compensation. So I will primarily be speaking about some features of unemployment compensation law. And I will also touch upon some of the other laws that affect employment as well as some resources. The Connecticut Department of Labor has a very good website with many questions and answers pertaining to unemployment compensation. On the website, you will find a new separation package for purposes of unemployment compensation, and that's the form UC 61 and 62, and that's more commonly known as a pink slip. And this new form was released a couple of weeks ago, so if you're still using the old form, check out the website and make sure you're using the new form. There is a question and answer link on the Department of Labor website, the Connecticut Department of Labor website, which is very, very good and is updated almost daily. The Connecticut Department of Labor is currently reviewing the federal unemployment programs, and it's anticipated that there will be additional questions and answers once they have completed their review. The Connecticut Department of Labor is also working on a new employer's guide to unemployment compensation, so keep an eye out for that as well. One program offered by the Department of Labor that has been getting a lot of attention is the Shared Work Program. The Connecticut Department of Labor website has a section with information about the Shared Work Program, including a short informational video. This is something that has been available for many years, but is particularly attractive now. The Shared Work Program is something an employer has to apply to the Department of Labor to utilize. According to the website, it may take 30 days to receive approval for the program. An employee's hours would be reduced between 10 to 60%. You'd have to have at least 2 employees participating in the program. And the employees would still be employees of the business. They would also be able to collect unemployment compensation for the reduced time. One of the nice features of this program is that pursuant to the CARES Act, 100% of the shared work unemployment compensation benefits can be reimbursed by the federal government. And another nice feature is that employees can get the $600 supplement in addition to the regular unemployment compensation amount. Another aspect of unemployment that's getting a lot of attention is the furlough. And a furlough is an alternative to layoff. When someone's furloughed, that individual is still on the books as an employee, but is not receiving any wages and is not working. You should check with your insurance carrier to see if furloughed employees can still receive health insurance, but that's usually one of the nice features of a furlough, and that employee could get unemployment compensation as well. Something else that I'm getting a lot of questions on are charges of benefits to employers. Traditionally, if an employer has a lot of unemployment compensation claims, that's going to impact their merit rating, which is then going to impact their unemployment compensation taxes. This is kind of a stay tuned topic because we're not getting clear direction yet on how the state is going to treat these charges to employers with this flood of unemployment compensation claims. For the time being, I think it's basically the status quo, but there is one thing I want to point out. Even under normal circumstances, an employer can appeal a benefit charge for several reasons within 21 days of a notification of a determination without contesting the employee's eligibility for unemployment compensation. So they're just contesting the charge itself. And that includes if an employee left work to care for a seriously ill spouse, child, or parent, or if an employee left strictly because of a state regulation or statute, or left because of a natural disaster declared by the President of the United States. Now, that's not exactly COVID-19. It doesn't fit perfectly, but it does show there's precedent for the state of Connecticut to consider extraordinary circumstances when looking at an employer's benefit charge. Another aspect is pursuant to the federal supplements on unemployment compensation, including the $600 per week additional amount for individuals for 13 weeks and an additional 13-week extension on unemployment compensation. Those benefits are being paid by the federal government, not the state government. So those should not impact the employer's benefit rating. One feature of the CARES Act that is particularly helpful to many individuals is the extension of unemployment compensation to people who would not normally receive unemployment compensation. For instance, to independent contractors, other self-employed individuals, individuals who may not have enough service to otherwise qualify for unemployment compensation. And we did receive some questions pertaining to how to apply for unemployment compensation as a self-employed individual. The answer is to apply to the state of Connecticut Department of Labor like you would for any other claim of unemployment compensation. You're going to indicate that you're not an employee, but then when it asks who the employer is, you're essentially going to indicate yourself. So there is not a separate form at this time for self-employed individuals. And if you look at the Connecticut Department of Labor website, they will tell you that they're still interpreting this federal law. So there's a lot for all of us to absorb, including the Department of Labor at this time. I was able actually to reach 2 people today when I called. So the good news is if you look at the question and answer section on the Connecticut Department of Labor website, you'll see 5 or 6 phone numbers. And I was able to cycle through those numbers and get to a person who picked up and answered my questions. So, you know, there are people who are there to answer specific unemployment compensation questions. I also just wanted to briefly touch upon some other laws that pertain to COVID-19 and employment. A few weeks ago, Congress passed the Family's First Coronavirus Response Act, and that includes an emergency paid sick leave provision and Emergency Family Leave Expansion Act as well. And these are brand new provisions for a lot of you, particularly employers who don't have 50 or more employees and aren't used to dealing with the Family Medical Leave Act or mandated paid sick leave. The U.S. Department of Labor website has extensive questions and answers on the emergency paid sick leave and family leave provisions. There's a webinar link. There are regulations, so there's a ton of interpretation, and there are links as well from the Chamber website. A few weeks ago when the act came out, I prepared an article that's on my law firm website with links to the Department of Labor website. Something that is important to keep in mind is that this act became effective April 1. And with this act, there's a poster requirement. So you have to, as an employer, post a notice regarding employees' rights pursuant to the Emergency Paid Sick Leave and Emergency Family Leave Expansion Act provisions. So if you go on the Department of Labor website, you'll see that notice. You should put that in your copy room or somewhere else prominent at your workplace. And if you've shifted over to telework, then you should email your employees those notices so they're aware of the requirements pursuant to those acts. Just very, very briefly, the emergency paid sick leave applies to employers generally with 0 to 500 employees, although 0 doesn't make a lot of sense. And employees are entitled to paid sick leave if they're subject to federal, state, or local isolation or quarantine orders, advised by healthcare providers to self-quarantine due to COVID-19 concerns, if they experience symptoms of COVID-19 and are seeking medical diagnosis, they're caring for an individual subject to a quarantine order or have symptoms of COVID-19, they're caring for a child if the school or place of care has been closed, or they're experiencing substantially similar conditions specified by the federal government. This is a 2-week paid sick leave, and employees under the first 3 categories would get full pay, and the last 3 categories would get 2/3 pay with certain caps under the law. Under the Emergency Family Leave Expansion Act, that's a more limited act, and that only pertains to employees who are unable to work due to a need to care for a child under 18 years of age if school or childcare is closed due to a COVID-19 reason. So those are the 2 acts. And with regard to the Family Leave Expansion Act, that is 2/3 of an employee's pay for the last 10 weeks of the 12-week family medical leave period. The first 2 weeks will be covered by the paid sick leave. So that's a very important new law that's going to impact almost all employers who are listening today. Something else to keep in mind is the balance between COVID-19 and the threat to the public and the employees, and balancing that with discrimination laws. The Equal Employment Opportunity Commission has a very good website with guidance on how various discrimination laws apply to COVID-19. In general, there is a relaxing of many of the provisions because of the direct threat to the public. However, you need to keep in mind that the discrimination laws are still valid, and when you're making these very difficult decisions, they need to be informed by equal treatment of employees. Thank you very much for including me in this program. If you have any additional questions specific to your situation, please feel free to contact me at Collins Hannafin. I wish all of you health and quality time with your families, both at home and remotely during this Passover and Easter week.
So thank you, Laura. Appreciate your time and your advice and insight. So next up, our last on the list here for our presenters is Tony Cirone. He's the managing partner of CironeFriedberg to speak on the tax front. Tony?
Thank you, PJ. Good afternoon, everyone. I hope this call finds you healthy and safe. Certainly, these are challenging times for all of us from a business perspective, but what I'd like to do is just share some what I would consider to be good news in a number of areas with the assistance that's coming from the federal government for all of us. I want to disagree with Jim, if I could. He indicated that the insurance agent was the trusted advisor. It is important for folks to know that the AICPA and our tagline is CPAs are the trusted advisor. So I thought I'd throw a little joke to kick it off. Couple things just to note. A lot of what I'm going to talk about now has been very fluid for the last week or week and a half. So I'm going to do my best not to be repetitive. And I could talk on this subject matter for a long time, and I've been limited to 8 or 10 minutes. So a couple of points I want to make. Number one is everybody should be aware that the individual tax return filing date is now July 15th, along with your first quarter April 15th. Estimated tax payment is not due till July 15th. Now, what's interesting is the IRS has not indicated whether the June 15th estimate will be extended. As of now, the June 15th estimate is still due in June, but your April 15th estimate is due in July. So we will see if there are any changes there. But so just mentally put yourself in a position that April is now July 15th. So therefore, today is January 9th from a tax perspective. The talk historically for the last week and a half has been the CARES Act and the Paycheck Protection Program, which I hope that most of you are familiar with at this point. If you are not, I would encourage you to reach out to your accountant and certainly your bank. Who is eligible for a paycheck protection loan? Any employer or any business with 500 or less employees, self-employed individuals that have been impacted by the COVID pandemic. You will apply for your loan through the bank that you do business with. You do have to use the bank that you have your checking account with and or a loan, okay? In terms of the loan in and of itself, how do you determine what you are eligible for? The Paycheck Protection Program is really two components. There's a loan component and there's a forgiveness component. I'm going to talk first about the loan component. The loan component is calculated by taking your gross payroll for the tax year 2019, add to it unemployment taxes and state taxes paid, add to it the cost of employee health benefits that you pay for, add to it any retirement plan match, annualize the number to get your average monthly gross payroll times 2.5. The bank will assist you, that in terms of the bank you're dealing with, will assist you with that calculation. But that's in essence how you calculate your PPP loan. All businesses were allowed to submit their applications last Friday. I will tell you that most institutions are doing their best to try to initiate this program as quickly as possible. Frankly, they were given a lot of work to do in a short period of time. As of last Friday, most banks weren't functioning as effectively as we would have liked, but certainly as of today, most banks are accepting applications. The challenge we have right now, folks, is it's a first come, first serve program. There was $350 billion allocated to the program. We believe that that money is going to go quick. The Senate did bring to the floor today, adding an additional $250 billion to the program. You may have seen in the news this afternoon that there's some debate going on, and it doesn't look like if the extra $250 is going to be kicked in, it won't happen probably until next week. So I would encourage all of you, if you haven't submitted your application, reach out to your bank and get your application in. In terms of self-employed individuals, you qualify if you're a Schedule C self-employed individual. So if you run your own small business, you qualify for a PPP loan, and you can begin the application process effective tomorrow. How do you calculate your loan amount if you're a self-employed individual? If you have employees on your payroll of your Schedule C, you take the annual gross payroll, and then you take your net income from your Schedule C. Keep in mind, for all employees, the maximum compensation, and for all self-employed individuals, the maximum compensation allowed for the calculation is $100,000. If you have employees that earn more than $100,000, you need to reduce your your annual payroll to get to your gross monthly payroll by any wages paid over $100,000. So please let folks know, let your friends know, let your family members know, if you're self-employed, you qualify for a PPP loan. Once you receive the loan, it will be direct deposited into your bank account, your business bank account. My understanding from various local institutions is this could take anywhere from 2 to 3 weeks at this point. We have yet in our firm to have a client that has been funded. We do have clients whose applications have been accepted, but we have yet to have any clients that have been funded. Once you receive the PPP loan into your bank account, from the time that you receive the funds, in the 8-week period from the time that you receive the funds, if you spend the money on the following: gross payroll, payroll taxes, employee health benefits, rent, utilities, and interest on existing debt and/or a mortgage. Again, those 6 categories, if in the 8-week period from the time that you receive your funds, you spend the money in those areas, the loan will be forgiven, provided at least 75% of what you spent was for payroll-related expenses. So the discussion point is, I've heard many different questions. Do I have to rehire all the employees? You do not have to rehire all the employees. You do if you want to have the dollar amount forgiven, but if you do not spend the money in those areas I described, the loan will not be forgiven, but you will have to pay it back, and it gets repaid over 24 months at 1% interest. And the payments are deferred for the first 6 months from the time you receive the funds, but the interest does accrue. So just to repeat that, you have to spend the money in those 6 categories: payroll, payroll taxes, benefits, rent, utility, and loan interest, to have the money forgiven. I encourage you to talk to your advisors to help you strategize the forgiveness plan once you receive the loan. I will also let you know that the provision for forgiveness will likely be adjusted, and we'll get more clarity on what that looks like, because there's a lot of different situations that could come to fruition that would impact someone's ability to have the loan forgiven. But the mission of the government is that it gets spent on payroll, keeps people employed, less people collecting unemployment. Therefore, the federal government is going to relieve the loan. Okay. I also encourage folks to please use the chat function if you have any specific questions we can answer once I'm finished, because most of you are probably in the system, have submitted applications, so you might have specific questions. Excuse me, just let me look at my notes here. Okay, so that is a lot of it on the PPP loan. Keep in mind, if you do get the loan and it is forgiven, it is not taxable for federal tax purposes. The state of Connecticut and most other states have not yet opined on what their position is going to be. It is not unusual from time to time for Connecticut to decouple from federal laws. Many of you might be aware, with depreciation in other areas, the state of Connecticut has decoupled, so we're waiting to hear from Connecticut. A couple of other opportunities for what the federal government providing to all of us is stimulus checks. Stimulus checks, I read this afternoon, have started going out today. Stimulus checks are $1,200 to an individual taxpayer, $2,400 for a married couple, and up to $500 for a qualifying child that's under the age of 17. If you're single, the adjusted gross income up to $75,000, you will receive full payment. For a married couple finally joined, it's up to $150,000, and then it phases out for singles from 75 to 150, and it phases out for folks married finally joint from 150 to 200,000. I want to also follow up on what Laura said as it relates to unemployment. Typically, self-employed individuals, partners in partnerships, and shareholders in S corporations typically are not eligible to collect unemployment. That rule has been changed. If you are not working, if you have literally no work and your business has been shut down, you can qualify for unemployment insurance. You should submit your application. My understanding is that right now, the state of Connecticut is running 6 to 8 weeks behind in terms of getting people their unemployment compensation, but the hopes that that system is going to get rectified and that will speed up. But you are eligible as a self-employed person for unemployment compensation. A couple of other areas in the bill that are helpful for folks: student loan relief. Student loan payments are not required to be paid through September 30th, so they don't kick back in until October 1st. There are some retirement plan changes as it relates to minimum distributions from your retirement plans. You have been able to defer minimum distributions. You can take a distribution from your retirement plan if the cash flow need is there of up to $100,000 with no 10% penalty if you're under the age of 59 and a half, and you can repay those funds over a 3-year period and it will not be taxable. Or you can elect to pay the tax over a 3-year period if you don't want to refund that account. It clearly has been very challenging times in the last 3 or 4 weeks for many of us that are in business. We are all going to get through this together. This federal loan program is a powerful piece of legislation that I encourage all of you to look at and look at the opportunity for a paycheck protection loan. The banks are doing the best they can. They're working really hard to be able to administer these loans as quickly as possible. As a chamber member, I want to hang my hat to our local institutions that are working really, really hard. I would say the healthcare providers right now are working the hardest, and I would say our bankers are number 2 in line because they were really stuck with this program and they have to administer it quickly. And then the last piece of advice to all is you do have the opportunity to call your banks and defer mortgage payments. You can defer loan payments, principal payments. You'll have to pay interest only. You can contact credit card companies for deferral of payments. My experience with clients and my own personal experience is all institutions have been terrific in terms of wanting to work with people and help people. So I know it's stressful. I know it's challenging times, but again, the financial institutions are here to help. The federal government has been here to help. And we're certainly you can text any questions specifically that you have. Be happy to answer it. You can visit our website at www.CironeFriedberg.com. We are providing a newsletter that is updating everybody regularly with what's going on. Feel free to reach out to me or any of my partners or anybody on our team. We're happy to help anyone, whether you're clients of the firm or not. Again, we'll all get through this together. Thank you, and everybody have a terrific Easter weekend and hang in there.
Excellent. Thank you, Tony. Appreciate your insight there. I will again remind everyone there's the opportunity to submit questions in the chat box. We will attempt to answer those during the Q&A. First up, since I have you on the mic, Tony, we'll direct one towards you. This one came from a local chamber member. If someone owns more than one business, can they apply for the PPE for each business as long as they are not related to each other and are separate corporations?
Yes, you can. Each PPP loan is driven by taxpayer or federal ID number, and you are allowed to apply for each business that exists.
Excellent. Continuing on that, the PPE, if the business receives a loan and is still in a forced shutdown, do they pay the employees while they are closed, or can they wait until they are fully operating?
The way that the rule is written right now, you have to spend the funds in the 8-week period after you receive it in the 6 areas that I described, which includes payroll. What I can tell you in the advice that we're giving clients, let's say, for example, you're a restaurant and you're still closed. It's a business decision on whether you want to use the funds and continue to pay people while they don't have to come to work. because the restaurant is closed. One of the opportunities you may want to look at is repaying this loan over 24 months at 1% interest is a very low cost. So while forgiveness is certainly a focus if you receive a loan, you may want to consider not letting the forgiveness be your only focus and keep that capital. Yes, you will have to repay it, but it'll give you ramp up cash and a very cheap, inexpensive lending opportunity to be able to get your business back on track after all this is over. So while I know most of us as business owners are focused on forgiveness, I would encourage you to also keep in mind that the loan, even if it does have to be repaid, is a very low cost of capital to allow you to get through this period of time. But certainly it does have to be spent on payroll, on payroll taxes, benefits, rent, utilities, and loan interest to be forgiven.
Okay, thank you, Tony. We got a couple other questions that are rolling in here. I hear it might be an easy one. 2,400, is that taxable for federal and state?
It's not.
It is not. Okay. There you go, Barry. So there's your response. Filing as a self-employed, should we say yes to the self-employed question, assuming the guide for filing that says to always answer no is simply not updated yet?
I would check with their bank.
Okay, so
Yeah.
there you go with your lender there. Kim had a question regarding if this is a new business and the first salary month was last month, March, can they qualify for PPP?
Yes, you can elect a fiscal period. Your business has to be in existence prior to February 15th of 2020 to qualify. And then you can elect a short period or a fiscal period if you think your payroll is higher versus calendar year 2019.
Thank you. Laura, we got some labor questions that could be directed towards you. Can an employer request an exemption from the paid sick leave and expanded family leave provisions of the Families First Act?
Yes, first of all, an employers of healthcare workers and first responders can choose to exclude those employees from coverage of the Act. Employers with less than 50 employees can request exemption from the expanded family and medical leave or paid sick leave based on an employee's request to care for a son or daughter whose school or place of care is closed or child care provider is unavailable for COVID-19 related reasons. And then there are a list of financial circumstances such as such leave would cause the small employer's expenses and financial obligations to exceed available business revenue and cause the small employer to cease operating at a minimal capacity. There's also a consideration for the significance of that individual to the business operation and if the business would be able to continue operating without the individual. And if the employer can find other employees to fill the time that would then be missed by this individual, if it's too difficult to find people to fill that time and it would result in the employer operating at a minimal capacity. At this time, the Department of Labor doesn't have an exemption process where you could submit a request to the Department of Labor. So for the time being, if an employer wants an exemption, the employer should be keeping track of why they think the exemption should apply and hold on to that documentation until there's a proper way to file that exemption with the Department of Labor.
Excellent, Laura. Thank you. I appreciate it. Kind of sticking on the labor. Another question we had come in: if a business is mandated to remain closed during the 8-week eligible period that the PPP is in effect, are businesses required to pay wages for furloughed employees?
Well, from a labor perspective, a furloughed employee does not receive wages. So really, if you're paying your employees to qualify for forgiveness, they're not really furloughed. And if you're paying your employees during that period of time, then the employees would not be eligible for unemployment compensation.
Thank you. Switching gears to the insurance, Jim, posed to you. What insurable risk are you seeing increased during the pandemic?
Yeah, as I said earlier, the risk that's increasing is going to be on the cyber liability, specifically attacks and hacking into systems. We're all getting, again, inundated with electronic communications, and something's going to go through somebody's cracks through a firewall, through a email scanning system. One of your employees or yourself is going to click open something that looks like an official notice or a newsletter or a news item worth opening, and it's going to be a phishing attack. It's going to be some kind of an intrusion. So that would be the one risk that I would really pay attention for. The other one might be, as I alluded to earlier, those instances where you make the assumption that you don't have to pay your premium because of what you heard or thought you saw, and you didn't gain proper approval, and therefore you let your insurance cancel, and then you're going to drive around or operate without insurance. So that's really the two issues that I would be most sensitive to.
Okay, you touched upon this briefly in your opening comments, but given the reduced business activity, how can a business get their insurance premium decreased to more accurately reflect their current state of activity or inactivity?
Yeah, again, to repeat what I said earlier, all you need to do is contact your agent, and who will then communicate with your insurance carrier to gain approval to lower your payroll estimates on your workers' comp policy. That will drive down premium. Lower the sales estimates on your product liability or general liability if your premium is driven by sales or activity level of some sort. And then again, go back to the matter of the size of your fleet and whether you need to have cars or vehicles laid up, and you want to get a layup credit for those vehicles. Again, be careful to make sure you keep on comprehensive damage, which is fire, theft, vandalism, windstorm, those kind of oddball things that happen that are non-collision in nature.
Thank you, Jim. Question from our good friends over at Diva Industries. On deferred student loan or any loan, Tony, will the interest continue to accrue or will it be waived?
It'll continue to accrue.
Okay, so the answer for that is continue to accrue. All right, looking at additional questions here. Just one moment. All right. If a business, here we go. Okay, are business allowed to use funds from the PPP loan for operational purposes, product invoices other than mortgage and utilities? If used in this particular fashion, does the entire loan become ineligible for loan forgiveness?
Again, you can use the loan money for any expenses that you want to use them for. The question is, will the loan be forgiven? In order for the loan to be forgiven, you have to spend the funds on payroll, payroll taxes, benefits, rent, utilities, and loan interest on existing debt or a mortgage. And of that dollar amount that you spend in the 8-week period from the time you receive your funds, 75% has to be spent on payroll-related expenses. So if you don't do that, it turns into a loan and then has to be repaid over 24 months at 1% interest with a 6-month deferral upfront of principal payments, of principal and interest payments, but the interest continues to accrue. So getting the loan in and of itself is allowing you to spend the money on whatever you want, but to qualify for the forgiveness, the money has to be spent in those specific areas.
Okay, great. Thank you. All right. So it looks like that's all the time that we have for today. I'd like to once again thank all of our guest speakers for their time today. Greatly appreciate it, along with all of those who have joined us for the call this afternoon. We are working to set up our next conference call for Monday, April 13th at 1 p.m. Will be a focus on the banking and lending aspect from both the state, along with the representative from the Small Business Development Center. We'll have the director for the state of Connecticut on for that. So keep a lookout for that information to come within the next couple hours. We'll have the president of Union Savings Bank, Savings Bank of Danbury, and Newtown Savings Bank joining us as well. So once again, and I've been repeating this in all of our calls, our chamber is here for the businesses in our community, so please do not hesitate to reach out to me via email or phone. We will do our absolute best to help you answer your questions and guide you in the right direction. I ask that everyone stay healthy and safe, and thank you, everyone. Have a nice rest of the day.